All right, so let's jump into IDBI Bank's performance. For the quarter ending December 31st, 2024, that's Q3 of the 2025 fiscal year, we've got their reports and a press release with some uh, key achievements to dig into. You might be interested in this if you're thinking about investing. Maybe you have a meeting where this will be discussed, or even if you just want to understand how a big bank like IDBI is doing in the current economic climate. Whatever the reason, get ready because we're going to be talking about significant profit growth, really impressive asset quality, and even untangling this whole thing about redeeming SASF
Yeah,
securities.
what's really interesting right away is how IDBI's performance this year stacks
Hmm.
up against last year's. Their net profit just shot up by a remarkable 31% year over year, ending up at 1,908 crore. And it's not just profits either. Their operating profit also climbed, rising by 20% to hit 2,802 crore.
So some serious growth, but what's driving this impressive performance?
Well, one key factor is their net interest margin, or NI for short. It's basically the difference between the interest a bank earns on its loans and what it pays out on deposits. Now, IDB's NIM saw a big jump, like 45 basis points compared to last year at this time, landing at 5.17%.
That's a significant jump. So what's behind that N9 growth? Is it just higher interest rates, or is there something else going on?
It's probably a mix of things. The interest rate environment definitely plays a role, but IDBI could also be adjusting their loan portfolio, maybe focusing on loans with higher yields, or managing their deposit costs better.
That makes sense. It's not just about going with the flow of interest rates, it's about actively shaping their lending strategy. But strong financial performance isn't just about revenue, it's also about efficiency. So, how is IDBI doing in that area?
They've actually really lowered their cost-to-income ratio,
Hmm.
which basically measures how well a bank is using its resources to generate income. IDBI's cost-to-income ratio dropped by a huge 351 basis points year over year, bringing it all the way down to 43.71%.
So, they're really getting more bang for their buck. What kind of actions might be driving this improved efficiency? Are they streamlining operations, embracing technology, maybe a bit of both?
It's probably a combination of factors. It would be interesting to see if their annual report has more details on how they're optimizing their costs. This focus on efficiency is crucial for long-term profitability, especially with all the competition out there.
Absolutely. Now, let's take a look at their asset quality, which is a big indicator of a bank's health.
And this is where IDBI really stands out. Their gross non-performing asset ratio, which is the portion of loans that are in default or close to it, dropped by a considerable 112 basis points year over year, ending up at 3.57%.
So fewer loans going bad, which is a good thing. What about their net NPA ratio? That takes into account the money they've set aside for potential loan losses, right?
Exactly. And IDBI's net NPA ratio is even more impressive. It's now down to a super low 0.18%, a 16 basis point reduction compared to last year. This tells us they're not only preventing bad loans from happening, but they're also managing and maybe even recovering the existing ones, plus their provision coverage ratio, which shows how well they're prepared for potential losses, is a very strong 99.47%.
Wow, that's an incredibly high coverage ratio. It sounds like they're being very careful about risk management.
It really does. It seems like IDBI is being very proactive
Yeah.
about managing their loans and making sure they're well protected if things get rocky.
Now, let's talk about loan and deposit growth. These numbers often show us a bank's core operations and how much confidence customers have. What's the situation at IDBI?
Their net advances, which is basically their loan book, have grown by a solid 18% year over year, reaching 2,006,807 crore. This shows they're finding good lending opportunities, which is a positive sign given the current economic situation.
So they're putting money to work, but are they attracting enough deposits to support this loan growth?
Yeah, their total deposits are growing steadily too, increasing by 9% year over year to reach 2,082,439 crore. This shows continued trust from their customers. It's worth noting that loan growth is outpacing deposit growth, but it's not at a worrisome level.
They seem to be finding a good balance for now, but maintaining that balance, especially in such a dynamic market, is key for long-term sustainable growth. Now let's talk about capital adequacy, which basically shows a bank's financial strength and ability to weather any storms.
This is another area where IDBI is doing really well. Their capital adequacy ratio, or CRR, improved significantly, rising by 166 basis points compared to last year, and now it's at a very healthy 21.98%.
That's a big jump. For those who might not be familiar with CRR, could you explain what it means?
Sure, CRR is really important because it shows how well a bank can absorb losses. Regulators set minimum CRR levels to make sure banks have enough of a buffer, to handle any financial shocks. IDBI's KRR is well above those requirements, showing they're well capitalized to deal with any potential issues.
That's good to hear. And their Tier 1 capital, which is the core measure of a bank's financial strength, has also improved, reaching 19.91% compared to last year's 18.04%. These numbers paint a picture of a bank that's not just doing well, but is also built on a solid foundation.
Absolutely. And speaking of their finances, there's one unusual transaction this quarter that we should talk about: the redemption of their SASF securities.
Right. The press release said they redeemed the remaining Special Securities Account Funds, or SASF securities, during the previous quarter. Now, for those of us who aren't financial experts, could you break down what these securities are and why their redemption is a big deal?
Well, SASF securities, they have this unique history. Tied to the Indian banking sector, they were basically created to help recapitalize banks that were in trouble financially. So IDBI redeeming these securities means they got an equivalent amount from the government of India and reversed a corresponding provision on their books.
So it's kind of a financial maneuver. That affects their balance sheet. What are your thoughts on this? Could you shed some light on why this might be important?
Well, it's definitely interesting. IDBI redeeming these SASF securities could mean that they're confident about their financial situation and don't need that government support anymore. Plus, it frees up capital that they can use somewhere else. It'll be really interesting to see how this affects their financials going forward.
Yeah, it definitely adds another layer to their story. Now, we have a good overview of IDBI's overall performance, but what about the different parts of the bank? Do we know anything about that?
Absolutely. Let's see how their different segments did this quarter, starting with corporate and wholesale banking.
Okay, so big business banking. What's happening there for IDBI?
Well, in Q3 FY25, their corporate and wholesale banking segment brought in on 2,137.77 crore in revenue, which is up from 1,928.89 crore last year at the same time. But compared to last quarter, Q2 FY25, it's actually down a bit from 2,615.97 crore.
So up from last year, but down from last quarter, kind of a mixed bag. What's causing these changes?
It probably reflects how unpredictable this segment can be. Corporate and wholesale banking often deals with large clients and transactions that are sensitive to changes in the economy. Things like interest rates, investment activity, and overall business confidence can all affect how this segment performs.
Yeah, I guess it makes sense that this segment would have bigger swings compared to something like retail banking, which is usually more stable. So what did their profits look like in this segment?
When we look at profit before tax, corporate and wholesale banking earned 241.31 crore in Q3 FY25, which is a significant recovery from a loss of 343.84 crore the previous quarter, but compared to Q3 FY24, when they made a profit of 500.87 crore, it's a decline.
So kind of a roller coaster ride for corporate and wholesale banking this year. It shows how important it is to look at more than just one quarter to really understand how a segment is doing. Now let's switch gears and look at retail banking. This is usually really important for banks. It's like their bread and butter. How did IDBI do here?
Retail banking is still doing well for IDBI. Their revenue was 8,392.28 crore in Q3 FY25, a little higher than the 7,597.90 crore from the same period last year.
Steady growth. That's good. What about their bottom line?
Their profit before tax in retail banking for Q3 FY25 was a solid euro 977.76 crore, up from 894.09 crore last year at this time.
So retail banking is bringing in more revenue and more profit. It seems like a reliable part of IDBI's business. Now, let's talk about treasury operations. This always feels kind of mysterious. What exactly does this segment do, and how did IDBI do?
Sure, basically, treasury operations handles the bank's own money. Think of it like the bank's own investment team. They manage things like investing extra cash, making sure there's enough money available, and dealing with risks from currency exchange and interest rates. It's really important to keep the bank financially stable, and it can also make money now for IDBI. Their treasury segment had a revenue of 3,381.27 crore in Q3 FY25, which is down from the 4,032.58 crore that reported in Q2 FY25.
So a dip in revenue for treasury. Was this because of things outside their control, or were there internal strategic decisions involved too?
It's tough to say for sure without more information, but changes in interest rates, currency exchange rates, and how well their investments are doing could all be contributing to these changes in treasury revenue.
I see. It's a segment that's really sensitive to what's happening in the overall economy. So how did that drop in revenue affect their profitability in this segment?
Even though revenue decreased, their profit before tax from treasury operations in Q3 FY25 was 561.04 crore. This is lower than the previous quarter's 1,749.1 crore, but it's still a positive number.
That's a big swing. It really highlights how unpredictable this segment can be. Okay, let's finish up our segment analysis by looking at other banking operations. This always sounds like a catch-all category. What exactly is included here and how did it perform?
You're right. Other banking operations is kind of a miscellaneous category, but it's often where we find some interesting things. It usually includes stuff like fees and commissions from services like trade finance, foreign exchange transactions, and other ways they make money. That's not from interest. Essentially, it's revenue from things that aren't the core lending and deposit-taking activities of the bank for IDBI. This segment brought in 64.76 crore in revenue during Q3 FY25.
So, a pretty small part of their total revenue compared to the other segments. What about profitability?
For-profit, other banking operations made 49.57 crore before tax in Q3 FY25. So it's actually doing better than you might expect in terms of profit compared to how much revenue it brings in.
That's interesting. It seems like these other operations might be pretty profitable on a per transaction basis. It also shows why it's important to look beyond just the total revenue and really understand how profitable each part of the business is now. Let's shift gears a bit. IDBI has been in the news for its focus on becoming more digital. How's that going? And did we see any impact from that in these quarterly results?
Definitely, IDBI is clearly serious about using digital technologies and being innovative in the digital space. In fact, they just won runner-up for Best Digital Performance and Innovations in their category at a big banking summit.
Wow, that's great. Awards are nice, but what are they actually doing to make things more digital? What specific examples are there of their digital initiatives?
They've started some interesting things like IDBI Samipis, which are basically small banking outlets managed by business correspondents. You can think of them like mini branches that offer basic banking services and help IDBI reach more people, particularly in areas where it might be hard to have a regular branch.
So they're trying to connect people who might not have easy access to banking services with a physical location. That's a smart move, especially in a place like India, with so many people spread out across the country. What other digital innovations have they come up with?
They've also added a new flight booking feature to their mobile app, IDBI Go Mobile. Plus, now customers can book flights right through the app and take advantage of different offers and deals.
That sounds convenient for customers, but I do wonder if getting into things like flight bookings that aren't really core banking services might distract them from their main focus. Do you think there's a risk of them trying to do too much?
It's a valid point. It's a tough balance for banks. They want to offer more digital services and compete with fintech companies that are really good at providing a smooth and integrated experience. IDBI needs to make sure these extra features make their core banking services better, not worse.
It's all about finding that balance between innovating and staying focused. All right, so we've talked about a lot here, overall financial performance, the performance of the different segments and their efforts to become more digital. What's your overall analysis of IDBI Bank's performance in Q3 FY25?
All in all, I think IDBI had a strong performance in Q3 FY25. Their profitability is good, their asset quality has gotten much better, and they're making smart moves to improve their digital capabilities. They're clearly aiming for growth, but they're also managing risks well.
So they're doing a lot of things right, but how does their performance compare to the overall banking industry and what's happening in the economy? How do they fit into the bigger picture?
That's a great question. The Indian banking sector is going through a lot of changes right now. There are definitely opportunities for growth with more and more people using digital services, government initiatives to make financial services more accessible, and a growing middle class that wants better financial options. But there are challenges too, like competition from fintech companies that are changing how banking works, regulatory changes that require banks to adapt quickly, and uncertainty in the global economy that can affect financial markets.
So it's a tricky situation for banks. Where does IDBI fit in? Are they ahead of the curve, keeping up, or falling behind?
It seems like they're in a good spot based on what we saw in their Q3 FY25 performance. Their strong financials and their proactive approach to digital transformation suggest they're doing what they need to do to take advantage of opportunities and deal with the challenges you mentioned.
So they're not just along for the ride, they're actually steering the ship, but the banking industry is really competitive. What are some things that could be difficult for IDBI even after this good quarter?
That's where things get interesting. Their focus on digital innovation is great, but they need to stay flexible to keep up with how quickly technologies is changing and what customers expect. Fintech companies are always raising the bar, so IDBI can't just relax.
It's a never-ending race. They have to keep pushing the boundaries. Anything else that could be a problem for them?
Another thing to watch is what happens with regulations. Changes in regulations can really affect how a bank operates and how profitable it is. IDBI will need to be able to adapt and make sure they're ready to follow any new rules. And of course, we can't forget about the global economy. Uncertainty in global markets and investor sentiment could create volatility that would be tough for even well-managed banks like IDBI to deal with.
So it's not just what they do internally, they're also affected by things outside their control, given all of this. Do you think it's safe to say that IDBI is set up for continued success?
It's definitely possible, but you can never guarantee success in the banking industry. It takes constant adaptation and innovation and a good understanding of the opportunities and threats that are out there. IDBI's Q3 FY25 performance is a solid base for future growth, and their strategic initiatives show they're on the right track.
So, a cautiously optimistic outlook, but this isn't just about numbers on a spreadsheet. Why should our listeners care about IDBI Bank's performance? What does it mean for them?
You're right, it's about connecting these numbers to the bigger picture for potential investors. IDBI's strong performance and forward-thinking strategy might make them a good investment for people working in banking. IDBI's journey provides useful insights into the trends that are shaping the sector and the strategies that are working in a rapidly changing market. And for anyone who wants to understand the Indian economy, IDBI's performance is a small example of the bigger forces at work, things like growth digitization, and the constant effort to make financial services available to everyone.
It reminds us that the banking industry is really closely connected to our lives and the economy as a whole. So, as we wrap up this deep dive into IDB Bank's Q3 FY25 results, I'm left with one final question. What does IDBI Bank's performance this quarter tell us about its potential for growth in the future, and how might it influence the changing world of Indian banking? I'll let you think about that. Until next time, keep exploring, stay curious, and may your financial journey be full of insightful discoveries.